Good morning, everyone. Good morning, Max. Good morning, Leo. Welcome to the Off the Block podcast by 21 Shares. We're super excited to have you. How are you guys doing?
Going pretty well. We had like very good weeks lately, especially on the Hyperliquid and hype side. So can't complain about anything. And now we're seeing like very interesting stuff with Bitcoin going down and like hype and some altcoins trying to keep up. So very exciting times. I think it's times we haven't really seen for a while. So
I agree. Actually, it's good afternoon for you, right? Max, how are you?
Yeah, good as well. I wish I could be as positive as Leo is, but the recent market drawdowns have kept me on my desk and kept me quite busy over the last few days. But I think we talked about this before we joined the pod as well. But it seems to be still over the cycles a little less brutal than what we've experienced in the past. So let's see how this continues to trend. But yeah, definitely a busy week.
Very busy week, but this is a special moment for us. We're super honored and psyched to have Leo with us. Leo is one of the early investors and contributors to Hyperliquid, but also co-founder and CEO of Khan Academy, one of the largest media and education company in crypto for a while. So Leo, welcome. We're super excited to talk about your journey in the crypto asset space, how you discovered Bitcoin, Ethereum, and the long tail of assets, your early discovery in Hyperliquid before Hyperliquid was cool. And then most importantly, we really want to understand your perspective on the overall Hyperliquid ecosystem and the future roadmap as well. And we're also going to have a few questions from our very own audiences that actually have prepared some really good questions for you. So welcome aboard. First thing first, walk us through your crypto experience. You've been in the space for so long. For many people, it's been decades. Some of them were not even born for the newer generations. Walk us through your experience in crypto.
sure. So first, thank you for both of you to invite me in this podcast. I'm very glad and thankful for this. I've been like following 21 shares and kind of the ETF journey in crypto for a while now, especially in times where like we were dreaming of ETFs. Now we have ETFs and more clarity around crypto and its regulation, so it's pretty good. But yeah, I'm CryptoPicsou. I'm actively trading the crypto market for a while now. I basically discovered crypto uh, a long time ago. I think it was around like 2013, 2014. When I was at college, I was with some of my friends. Some of them were like kind of mining Bitcoin, but also other cryptocurrencies. At this time, I was like, yeah, it is. I don't buy it. I was very young, and this is not something that I was really interested in. And then after that, I kind of regretted it because like my friend was mining, like it was so early, like it was a different time. But after that, I did some kind of computer science, tech studies, and everything. And I started playing a lot of Counter Strike. And when I was starting playing a lot of Counter Strike, it ended up like you ended up having to buy some Bitcoin to buy some skins sometimes, at least if you were using third parties marketplaces. And this is how I started to buy some Bitcoin. At first sight, it was not something I was trying to value. It was just like a currency I was using to buy skins. And then after that, over years, a friend of mine started to being more aggressive and loud about it on Twitter. His name is Capet. He's one of my business partner. And he was saying like crypto is amazing. Bitcoin is amazing. This is something you need to check. People were calling him crazy in 2016 when he was saying that. Then I basically started digging into it slightly. And then I basically put it on my savings into it. Like I was running some
Wow.
small businesses, like when I was also younger, and
Yeah.
I put it what I had. It wasn't much, but still, I started buying like Bitcoin around like 700 $800, like
Not bad.
Ethereum around, yeah, 15 $25. And yeah, I was like, I'm young. I'm fine to take risk. Like if everything goes wrong, I'm gonna go to my parents' house. So like the downside is not bad, So I took my chance, and it ended up being my first interaction with financial markets. At this point, I was very young. Really heard about like Wall Street, and some friends of my family were like kind of traders and everything, but I didn't really knew much about this. And then Bitcoin and Ethereum really got me into it. So I started to actively follow it, started to understand like what it is, how it works. I think my tech studies really helped to and understand the potential of Bitcoin and also like the difference with Ethereum. And then like the price kind of like skyrocketed. They went super vertical. So I was getting more obsessed about it, like I was checking the charts all the time. Things didn't really change, but,
Yeah.
and, and, and then I also started to trade more as a market. So I started my early days on Bittrex and Poloniex, and then also discovered like, BitMEX. It was like the BitMEX trenches,
Yeah.
and goes up 2017, top at 20K, goes back to 3K, lost a bunch of money. Nobody gives a shit about crypto anymore. And I'm like, I'm gonna stick to it. Like I feel that it's gonna run back, but also I think that we kind of overshoot on the upside and also on the downside. So I was like, yeah, there is some potential there. I'm not gonna miss the next one. And I basically spent all the bear market from 2018, 19, 2020, 2021 by, digging, trading, learning how to be profitable constantly. And this is how I basically learned most of the things I learned so far in crypto, especially in bear markets, because it's very calm moments. And also when it comes to Twitter, are only the key interesting people in the space staying there, and this is how you really learn a lot. That was very exciting. And then, I mean, after that, I kind of, like started to trade in the early days of Binance, but also on FTX. I did the IEO of FTX. At that time, like FTX was so small that I got some issues, and SBF was answering on Telegram to get
Yeah.
my customer support tickets done. So it was pretty funny. And also we got also the COVID, which was totally insane in retrospect. And then everything went back. And this is when I decided to build my media in order to really educate people to crypto. Because in 2017, 2018, people were willing to learn more about crypto, but the knowledge available was very minimal. And it was much more like prices, less content about like how it works and everything. So I started building Khan Academy, and it basically went from zero to millions of visitors per year, 200K followers in the largest French-speaking media. And based on that, I really got lucky to get involved in the industry more deeply on the kind of builder side of things, as I was interviewing people within the industry. So I interviewed basically Vitalik, Jeremy Aller,
Very
Archer
nice.
Ace, but also Jeff, and great things happened. Yeah.
This is wonderful, and your background in gaming is definitely some of the key denominators that we see commonly across people that got into crypto in the early days, and then fast forward to trading and of course education. And we cannot move forward with mainstream adoption without education. So kudos to you guys for everything that you've done at Khan Academy, especially for the French-speaking audience. Before we delve into your early discovery of Hyperliquid, Max, why don't you introduce us to what's Hyperliquid? We at 21 Shares launched the world first Hyperliquid products, ETPs and ETFs, both in Europe last year, and in the US actually nearly a month ago as the first issuer to do that ever in the US market. So it's been quite a ride. We have over $100 million in total assets across these two products. But Max, walk us through what's Hyperliquid for the audience.
Sure, gladly. I feel like I've done this 100 times over the last 2 weeks, but it never gets any less
Never
boring.
gets old.
Never gets old, exactly. And the way I would describe Hyperliquid is really like it is a 24/7 trading super app. So it really started with crypto through perpetuals, which are basically futures that never expire, and they allow you to take a bet on the price of an asset without actually holding the asset. But now you can actually trade real world assets or different types of asset classes beyond crypto. So you can trade things like commodities, such as gold and silver, equities, indices, all in one venue. And so now even half of its most traded markets aren't even crypto anymore. But I would take it a step further than that as well and say it's not only a trading super app, but it's also a marketplace or a venue where entrepreneurs can build financial applications on top of it. So we can really think of it like an eBay for banks or broker dealers, where any of them can tap into or plug into Hyperliquid's infrastructure and use it to build their own primitives and use it for their own purposes. I could go on for a long time here, but I don't think we're here to listen about me talking about Hyperliquid. So maybe I'd want to pose a question back to you, CryptoPicsou, about when did you first come across Hyperliquid and what actually drove you to open the application and to explore the ecosystem?
And we gotta give
Yeah.
credit to Leo or CryptoPicsou because he discovered Jeff, the founder of Hyperliquid, and Hyperliquid itself before Hyperliquid was actually a thing and very cool. So kudos to you guys. But yeah, please, Leo, go ahead. Fire
Yeah,
away.
sure. I think everything begins around perps for me. So I was trading perps, so perpetual swaps and futures directly on BitMEX and then FTX, which were the most like popular venues like in the past. And I think things accelerated for me once FTX went bankrupt, basically. So lost a bunch of money because of FTX went bankrupt and because SBF decided to do whatever he wanted with the money of his customers. So it's pretty funny. He's arguing now that he made great investments. Yeah, I think it's easy to make great investments when you steal billions of dollars of your customers or whatever. And once it went bankrupt and we had this massive event, Black Swan event at the bottom of the cycle, it was tough for me because like when you lose like very important capital at such important moment in the cycle, it's something that pisses you off a lot because it feels that you lost a lot of your time because like you spent like days and nights like trading to accrue your capital and at the end of the day you get still your capital. So I think once FTX went bankrupt, I really considered moving more on-chain and more into decentralized exchanges and pushing more towards self-custody because at the end of the day what happened with FTX would have not really happened if I was fully self-custodial in some ways. I mean, you still have risks on chain and within DeFi. But I think the key takeaway was that, yeah, I didn't really own my money because like someone else was like custodying it for me, you know? And especially for crypto, which was like the very early days that regulated, I think it's much different now, but whatever. So I decided to move towards like DYDX, which was, I think, the dominant venue at the time. And I was really passionate about it. I became basically ambassador of DYDX for 2 years and a half, something like that. And during my journey through DYDX, learned tons of things, but mostly, I think Q3 2023, I was spending a lot of time digging into also the alternatives in other venues because I really wanted to remain agnostic and not be like the guy who is partnering with the company and a brand, but not like considering what's happening within the rest of the ecosystem because this is the best way for you to be sidelined and don't understand how the ecosystem moves. So I started to trade on Hyperliquid Q3 2023. And I really felt Hyperliquid was different on two perspectives at this time. I think the first perspective was UX. So it was very much like centralized exchanges, which is something which was not the like the standard for decentralized exchanges. At that time, decentralized exchanges had like horrible UX and interfaces. And so I was like pretty happy to have such decentralized self-custodial solution while having like a good experience. But also when it comes to liquidity, what I noticed is that in the early days of Hyperliquid, which was very small at the time, the liquidity was already very good. So I don't know if it's because of HLP or because of like, I don't know, like friends of Jeff market making or like people getting attracted to try it very early on to get incentives in some ways or like betting on something. I don't know. But at that time it was sick. And the gap was huge because like it was so small but so good that I was like, okay, something interesting is happening there. I need to spend more time with it. So once it happened, I traded more and more actively. And over time, I decided to get in touch with Hyperliquid's team. So mostly with Jeff and Julian. And when I chatted with them, I was like really surprised of like their attitude. They were very open-minded, but at the same time very smart and humble, which is not the case for a lot of people. Like in crypto, when people are building some things or cool stuff, they tends to be arrogant sometimes, which pissed me off. So when I saw that those guys were smart, humble, but also had a huge trading background, I was like, okay, let's do something. So I get in touch with them. We basically got into, like, we arranged and scheduled an interview of Jeff, January 2024. I think, honestly, it's probably one of the first interview of Jeff that has been about Hyperliquid and really digging into it. And I think one of the reasons why it has been one of the first public interviews about Jeff around Hyperliquid is that nobody gave a shit this time. Like, Hyperliquid was not hype, it was not it was a topic. And when I did the interview, like, I had an understanding of it, but not fully. Once I finished the interview and I chatted with Jeff and everything, like, I really understood it was different and it's going to be much bigger than it was at the time. I could not imagine at a single time that it would have been like bigger than, I don't know, DYDX or like centralized exchanges now, like Bybit and other venues that are like very popular. Like, I thought that it could be very big, but it would take more time. I think most of the time, like, when you see ambitious people in crypto, they promise a lot of things, but they don't really ship.
Deliver, right? Yeah.
Yeah. Like, there is a huge gap between what people say in crypto and what really happens. And through 2024, I've seen the Hyperliquid team really, shipping, be active, and receptive to feedbacks and everything. And this is where I fully committed to it. So 2024, I basically traded every week, sometimes every day on Hyperliquid. Basically spent a lot of time with my friends to talk about, like, how Hyperliquid what good was, and like how big an airdrop we could receive. Like, we're spending all days chatting about that. And then, like, it got like more and more attention, and then at the end of the day it became something much bigger. So being one of the top 100 recipients of the airdrop. So it went pretty good. Like, we got really
Congrats.
rewarded by that. Thank you. And yeah, I'm just blessed that Hyperliquid exists, because I think that now, like, if Hyperliquid didn't really exist or didn't really took off, I think I would not work in the industry. I think they kind of changed so much things, like, when you think about it, like listings, spot listings. So far, like, the centralized exchanges had a lot of power around this, and you had to give like a lot of your supply and pay like huge amounts of money to get listed, which can be understandable at some point, because, like, if you have like strong distribution and it provides value, why not charge a fee? But sometimes the fees were like so high that it doesn't really give the chance to, given for good projects, it requires like to raise money or give a lot of suppliers to offer that. Hyperliquid changed that. And now we're seeing this also change for perps and many other verticals and primitives. Yeah, a lot of stuff to say, but I think it's a good start.
No, but this is great. And, to recap, what we've seen is that Hyperliquid is a phenomenon that we've never really seen before. And also they change the dynamics around, to your point, transparency of the order book, unlike certain centralized exchanges, self-custody to avoid, of course, the commingling of funds with the operating company and the customer's funds. And then thirdly, a community first product that actually people care about. To your point, you received one of the largest airdrops, but also people felt like owners of the network as well in the early days and even until now. And then lastly, I would say Hyperliquid also came at the right time, at the right moment, right after the collapse of FTX. We always mention that when FTX happened, it really reminded us of Enron. And Enron in the early 2000s was one of the largest frauds ever. And then fast forward to 2008, Bernie Madoff did a lot more by orders of magnitude. And then fast forward to 2022, FTX decided to do a bit more than that as well by holding the beer. And we do think that that moment really created this inflection point for the industry to really think more deeply about risk management. And there are, of course, several products that were out there for a while, like ETPs and ETFs, exchange traded funds and exchange traded products. that really help investors to have access to crypto assets through their banks and brokerage account without basically handling the custody. Then also we're seeing products with self-custody features like Hyperliquid. And it really came at the perfect time because there was distrust in cryptocurrency exchanges. That's why you've seen the balance on exchanges going down significantly after that. And then also looking for more, either centralized solutions like ETPs or ETFs or decentralized ones like Hyperliquid. And I think there is a sweet spot in the middle. You could see the conversions with some of these listed Hyperliquid products that you could see out there. But I do think that your story resonates a lot with the audience that there is a need for different market segments to have exposure to certain assets. And definitely, I would agree with you that the dynamic around token listings completely changed the game with Hyperliquid, with a permissionless way, with a marketplace as well, where you can trade oil, silver, and gold after market close, especially amid geopolitical conflicts. And that resonates a lot because many people were always considering and wondering why we would need 24/7 markets. And it didn't make a lot of sense until maybe a couple of months ago after the war in Iran started. And then people were needed, especially trading houses, were needed to have a way to actually hedge during the weekend. And that's why the CME followed suit as well, right? Like the CME launched last week with $50 million in volume over the weekend, and Hyperliquid just for Bitcoin, Ethereum, Solana, and Hype. The volume is about $9 billion over the same period of time, right? So I think it shows again that 24/7 is a new standard, and Hyperliquid really showed how the market could be done. And even the token economics being aligned with the community is also incredibly important as well to show exactly for the next generation of protocols how we could create the next Amazon, Google, and Facebook with blockchain rails. So that's really exciting. So kudos to you for having exposure and the discovery of Hyperliquid through your personal experience. And I think learning by doing is the best way in crypto, to be honest.
Yeah, agree. And I think what really makes Hyperliquid different in some ways also is how pure it is and neutral it is since inception.
Yeah,
Like, I
great
think it's
point.
probably one of the biggest deal because
Hmm.
I think Hyperliquid really came out during a time where like people were pissed off like insiders and this is getting all of the supply and communities not really got involved or having a very small piece of the cake while doing the hard work. And also having people that are like, being friends together and kind of like keeping the thing as a cartel in some ways, like as a group of people or gatekeeping things, etc. And I think what really changed with Hyperliquid is that they kept being neutral for very until now on the technical side of things, but also on the marketing communication side of
Yeah.
things in the way that there is no insiders. Like I've been behind the scene for a long time and I
Yep.
never heard of like someone having like announcements or
Yeah.
information before it get announced. I mean, you can imagine where the team is going and then anticipating what's going to happen in some ways. But I've never really seen like huge insider things around Hyperliquid, which makes like a huge difference. And also, I think the fact that there is no insiders and no VCs and only like the community having tokens, which could be like VCs by using the platform, or could be market makers using the platform.
Of
I
course.
think it makes it very fair. Like at the time, I was chatting with Jeff during the interview, and he mentioned that since the points formula wasn't like public and transparent, he
Hmm.
thinks that it divided by 8 or 10 times the farming around Hyperliquid, which made the distribution more organic and
Hmm.
didn't really push, I would say, professional farmers to
Right.
aggressively farm
Uh-huh.
the protocol. Because like on other protocols, if you know exactly what gives you points at what scale, etc., then you have like,
Abuse. Yeah.
abuse. And it tends to be like the token ends up being in the hands of people not really caring and that people who are mercenary and like selling day one and leaving and like what happens next, where
Yeah.
like on Hyperliquid you've seen like the token and the value spread around the community and people holding because of conviction, while it was like one of the largest airdrop. which is
Yeah.
totally crazy to me.
Yeah.
So yeah.
I think,
No,
yeah.
it's good. No, it's a fair point. Go ahead, Max.
No, sorry about that, Ellie. Jumped the gun here out of excitement. On my side, I think, that immaculate conception that you guys talked about, it is a little bit analogous, to Bitcoin in that respect. The fact that there's no insiders, no VCs. And, you mentioned a little bit of how this shows up as a contributor to Hyperliquid, but I even think the story goes for token holders as well. The fact that there's not that dilutive overhang from VC capital that otherwise would potentially sell their bags to retail is something that has plagued a lot of other token launches over the last few years. And in this case, it's completely different. And I think the point that you raised on capital being spread through the ecosystem and the conviction still being held across multiple different token holders speaks to that point as well. So yeah, I'm very, very impressed by the approach. I know it's difficult to be that neutral and fair launch from the get-go, and I think it's also then they're now reaping the rewards as a result of that.
Yeah, they had like a lot of opportunities to take shortcuts, and they didn't. And I think also the tokenomics really changed the industry. I don't
Exactly.
know how much you want to dig into it, but
No, I think it's a super interesting point as well, and I was hoping you leaned into that because I think people are understanding now a little bit of how what the platform is operating as. But beneath the hood, beneath the price action, is the tokenomics that you mentioned as well. And we've seen many interesting use cases or many interesting applications over the years that maybe didn't tie back that value that they're creating back to investors. But I think Hyperliquid is doing exactly that. Do you want to walk us through what that looks like on your side, Leo?
yeah, sure. So I think what's clear when Jeff and the team is speaking about like how they feel about Hyperliquid is that no insiders, no fees to developers, dev team, everything for the community, community owned. And I think this is what makes a huge difference is that in crypto, for a long period of time, and even now, I think the interests of users and holders is not always the same as the interests of the investors or the interests of the team. The fact that everybody doesn't really makes it really creates problem, because at the end of the day, like if the token is useless and everything goes to like the equity side of things, then why would you launch a token in some ways, So what Hyperliquid did is that they got 100% aligned with the community by not taking any fees and getting an allocation of the token of the total supply. All the revenues are basically, or at least a huge part of the revenues are sent to the assistance fund, which is an address which is used to buy hype continuously. When Hyperliquid generates $100 of revenue, like $99 or like most of it is sent to the assistance fund, and the assistance fund, the address is automatically buying hype on the market. And assistance fund is also considered as burned address, meaning that all the revenues are basically burned in some ways. When you think about it, you're like, it could be tough for development in some ways, because if you don't really have revenue and you don't keep revenue in your pockets, how are you gonna grow? How are you gonna pay the team and all those things? But everything's end up being within the token. So they put all the revenues into buying the token, which values the token, which gives value to the token the team is holding and the foundation, and they pay themselves with that, instead of like keeping a cut of it. So this way, like the community and the team are 100% aligned on this. And I think this is also why I'm very bullish on the team and Hyperliquid and Hype, is because I think they are like taking care of the token as much as they are taking care of the products and primitives and verticals they are deploying and working on. Because at the end of the day, the price of your token is kind of the half of the protocol in some ways. At least with this model, it is in some ways. And when the price goes up, it's the best marketing ever. So what they ended up having is a community being very thankful, but also being paid by the airdrop to basically promote Hyperliquid forever. And the price going up, which makes people speak even more about Hyperliquid. So this can happen when the products and the platform is
Well aligned.
you
Yeah.
know. Like you can try to do this with like another product. It will be different because like it's not the same inception, not the same TAM, not the same scope and everything.
Yeah.
In this case, in this unique case, it fits perfectly. Yeah.
And it's quite a powerful flywheel, right? The numbers that we're being talking about here, they're not small numbers, you know, in terms of how much revenue they're generating on an annualized basis as well. I think it was almost close to $1 billion worth last year, which essentially means that per employee, they're one of the most capital efficient businesses in the world. I mean, I think they generate around $80 million to $90 million per employee. And it manages this exactly because it's a blockchain based business, right? It replaces all that back end, the settlement layers, the clearing houses, and the army of back office with blockchain technology. And it's what also keeps this flywheel going quite well, because if you imagine that you have to pay hundreds or tens of hundreds of employees, here instead you only have to pay 11 or 12. So in that sense, it's a flywheel that continues to strengthen as well.
To me, they are not paying 11 or 12 people. They are paying 11 or 12 people plus the community. Because this is what
That's a fair
Jeff
point.
tells us every time in conferences, is that the community is the team. In this way, like I think this is why Hyperliquid has been fast in like in delivering shipping, is that Hyperliquid has an army of builders and users to advocate for them, but also to build stuff on top of what they deliver. So what they do is they kind of build the infrastructure and new primitives and new big features in some ways, but are like permissionless, or at least allow users to build on top if they have like a decent amount of hype stakes, or like for some features there is no requirements. And so this way they build like the infrastructure, and people build new use cases and new features on top of it continuously, which like lets them focus on the next big thing instead of focusing on like getting every detail perfect on like every new thing and building everything themselves. They would have been way slower. I think this is what we're seeing with Lighter. Like Lighter is shipping and everything, but the community is much smaller, and the builders within Hyperliquid ecosystems are building much faster because we are more. And also I think we're more motivated because like in a Hyperliquid ecosystem, there is no grants, meaning the foundation is giving no money to anybody. Like it's just like people who are willing to spend their time and build something meaningful in the interest of the ecosystems. Obviously, like investors position themselves, and you have like family offices, VCs funding some protocols and everything. But at the core, there is no one granting the thing. Like it's mostly people building by convictions, which is something I'm not seeing on most other chains available in the market.
Right.
Except like, for example, Ethereum and maybe, I don't know, Base and maybe Solana. I think most protocols are incentivized by foundations to build, which is not something really, I mean, which is something happening on a Hyperliquid thanks to the airdrop or potentially new incentives. But, you know, it's this way people are more pushing towards something that is aligned, and they are like more active and faster, basically.